Welcome everyone to the future of stable money. My name is Tianwei, co-founder and CEO of StraitsX. In this series, we'll be exploring the evolving role of stablecoin in global payment, delving into topics like regulation, on-chain FX, programmability, and how these innovations are shaping the broader financial ecosystem. Very happy to have here today my good friend Hassan Ahmed, Singapore Country Director for Coinbase. I think by now Coinbase should be a household brand to all our audience, so it does not require further introduction. But some folks might already know Hassan is probably considered an OG in this space. And a funny fact is that we and Coinbase, in this case StraitsX and Coinbase, go way back, because in the early days when we were still known as X First, we were the first payment gateway that actually helped Coinbase SG launch in early 2016. That's right before I think Hassan joined the company, and then eventually when Hassan joined the company, he helped steer it to where it is today in Singapore, become a major payment institution. So very happy to have you here, Hassan, today. We'll throw it back to you to introduce yourself, if anything you want to add to the audience.
Yeah, thanks for having me on, Tianwei. And definitely, you were one of the first people in the community that I met when I first moved to Singapore about 6 years now. So thanks for all your support and guidance along the way. I think you and I have had some fun times chopping it up on where the space is going. So excited to sit here today and kind of get into it. And from a Coinbase perspective, some early lore between StraitsX and Coinbase. And since we got our license, it's been a really phenomenal journey growing out our franchise in Singapore.
Yes, definitely. Like I said, we want to keep things casual today, and then it's just treated like an old friend gathering and having coffee chat, which we used to do all the time. I think, like I mentioned, that the space is definitely heating up, especially around stablecoin, because of the recent passing of the Genius Act in the Senate itself. I think that has been both a topic that we've talked up multiple different times over the years itself, and how the regulation is really needed to steer in terms of adoption, drive innovation, and give clarity to the market. But in some sense, I think a lot of the thunder have been stolen recently by the US side with the passing of the Genius Act. But actually, in this part of the world that we're both seeing in Singapore, in this sense, has been actually a pioneer in this space, if both of us agree on that. The Singapore MES have really given guidance about the SCS, a single currency stablecoin regime, actually passing that, telling even signal on that last year. And StraitsX is very honored to be one of the two issuer that has been recognized to be in early compliance for the upcoming regime itself, for the issuing of XSGD, which is our Sing dollar stablecoin, and also XUSD recently, which is our US dollar stablecoin that has just went live on Binance itself. So with that kind of backdrop, this is where I would love to pick your brain and actually talk a bit more on what is Coinbase view on this whole direction right now, with the Genius Act passing, with MiCA, with Hong Kong regulation right now also passing a stablecoin act itself. What do you think this will do to the space itself, and how Coinbase is strategically positioning themselves to embrace this kind of growth?
Yeah, I think we're living through an incredible moment in time. This truly is a watershed moment for the whole global industry, not just the US industry, partly because the US just has a lot of enforcement power, some of its agencies on a cross-border basis as well. So the whole industry was sort of somewhat like frozen in its tracks on being able to do core product development and use cases, while this regulatory overhang was happening in the previous administration and some of the SEC and CFTC overreach. So now we're having these conversations that were unimaginable 18 months ago. With the Genius Act now being enshrined into law, that's something that cannot be easily overturned by the future administrations. That is the first time that there is clear rules of the road in the US, at least for the stablecoin vertical. And then Clarity Act is hopefully not too far behind, and that will then provide further structure clarity in the US. That is one of the big things that we're seeing as a result of this is it's not even so much about like the crypto native companies anymore. It's now about unlocking institutional capital and for allowing mainstream financial services businesses and consumer tech platforms for really kind of coming into this space in a full-throated manner for the first time. And you're seeing announcements across the board, right? JPMorgan, which is actually partnering with Coinbase, is doing its tokenized deposits on Base. Citi came out with the stablecoin strategy. Brian Moynihan from Bank of America is talking about it. And then, Walmart, Amazon, and, a bunch of e-commerce companies are now looking at their own stablecoin programs. So I think we're going to really, cross the chasm onto kind of, beyond, early adopters to late adopters to start getting into core mainstream adoption and use cases very, very soon.
Yeah, exactly what I actually think. And like I say, we're kind of living through this really exciting space, and we have been there together, right? Throughout this time, where first they laugh at us, then they'll be saying that this is not going to be something fact and stuff, to where this is where today everyone comes to recognize that this is a mainstream product and it's bringing about real innovation here. And with regulation, it really unlocks the capability for a lot of innovators. We are also seeing a lot of excitement in this space, where our collaborators have reached out to us to basically collaborate with a MES regulated stablecoin itself. But maybe on that, to double click on that itself, for us to really move to the next segue itself, I think I've shared on multiple occasions that when you interviews and stuff, is I foresee a world with a lot of stablecoin, right? You just mentioned a snippet of that. Just the US dollars alone, there will be interest from multiple different ecosystem and mega corporation that will issue their own US dollar stablecoin. So in this sense, we have XUSD here, which is the US dollar stablecoin that we issue out of the MES license regime itself. But at the same time, what I think is also super interesting is what I also think I have kind of double-click and predicted in the future is there will be a lot of non-US dollar stablecoin out there. And this is a trend that we kind of pioneered. So XSGD, which is the Sing dollar stablecoin, which we launched more than 5 years now and running. But right now, you will see that there is going to be a lot of different non-US dollar stablecoin launching across the region itself. So with that itself, I'd love to hear what's Coinbase take on this, right? I'm super excited about the future of stablecoin FX and how that would changes the whole entire payment regime itself and how the ecosystem will evolve. But one to love to hear your take on, you share similar view. Does Coinbase think that that is something where a lot more innovation will be unlocked? And before that is then I would love to talk a bit more on how, because Coinbase plays two roles, right? We have Coinbase, the success that everyone knows, which is institutional grade. But at the same time, there's also the base chain, which I see a lot of investment by Coinbase going into, which is on the DeFi side. We'd love to hear your take on how these two will then interoperate and work together on.
Yeah, I'm happy to take the latter one first. So definitely, this is a mega trend that is we're now living through, and it's going to be enduring for at least a decade, if not more, in terms of growth and adoption. So at Coinbase, we are very, very excited about what's happening, both on the USD stablecoin side and the non-USD stablecoin side, which we'll talk about in a second. But one of the things that we've done is actually earlier this year, we introduced a payments and stablecoin business unit as part of our State of Crypto announcements. So that is how excited we are. We've obviously worked with the USDC and Circle for a long time, but now we've widened our aperture to think about, okay, well, what else is there that we can really start going after? And payments is an obvious one, and we can talk a bit more about that. But from a core infrastructure perspective, right? So now we're sort of at this juncture where we now have to think about how we support the next 10 to 100x of growth. And so, we are taking steps at the infrastructure layer from a custody perspective, thinking about like asset support, multi-network support. How do we actually sort of provide that across all of our product surface areas? And then at the application layer, enabling more use cases like payments and commerce. That's something that we are, even from a mental model perspective, we are starting to differentiate between kind of the trading side of the house and then the call it like payments and stablecoin side of the house, because they are going to now diverge into their own, standalone use cases and almost sort of business lines. On the Base side of things, so just very quickly for folks that may not know, Base is the layer 2 scaling solution on Ethereum that Coinbase sort of has been incubating for 2 years now. Base is the largest layer 2 by TVL, by users, by activity at this point. It's a thriving ecosystem. And on Base as well, we recognize that all of these stablecoins have to be on-chain, and they have to be able to interact with DeFi protocols and actual sort of apps that exist on-chain so that users can access them all around the world. So a couple of things that we've done on the Base side, two I'll highlight. So one is, when Base launched, Brian sort of gave the team a challenge that the transactions need to be under 1 second, under 1 cent for the next wave of use cases to be feasible. And so today, we're proud to say that Base has been working on scaling a lot, and we introduced this new primitive called Flash Blocks that allowed us to reduce our confirmation times from 2 seconds to 200 milliseconds. So that's a 10x improvement on throughput that we achieved in the last 3 months. And so, that starts getting into, very kind of point of sale auth kind of SLAs.
Exactly.
So I think it's going to be pretty interesting on, just again, new things that we can enable. And then the second thing I'll highlight is on the ecosystem side, we launched this product called the Base app, which is now sort of a kind of an encompassed experience that is sort of consumer facing. You can just download the app on iOS and Android. And you can it feels like an app store type of experience where you can just interact with smart wallets, mini apps. You got a wallet where you can hold your stable coins, and then you can really kind of seamlessly go across, features like Web3, social, and whatnot. So I think that's sort of where we see a lot of where the on-chain activity will happen as well. So you can be able to easily do kind of FX swaps eventually, and be able to move that around on-chain and send it to others. Now, coming to the non-USD side, so this is, I think, for folks that are paying attention, this is a huge growth area that should not be missed. The investment thesis goes something like this. Today in traditional FX markets, 60% of global currency reserve is USD, and the remaining is non-USD. In on-chain markets, 98 to 99% is USD stablecoins, and the remaining is non-USD stablecoins. So as mainstream finance converges on blockchains, you should expect that the non-USD portion of on-chain FX is going to expand out to mirror what traditional FX looks like. And we're going to see market mechanisms like arbitrageurs and hedge funds and market makers start to really kind of make markets traditionally and on-chain as stablecoins like XSGD become more popular. And that will provide phenomenal opportunities both at the infrastructure level, at the issuer level, and at the financial services engagement level as well.
Super exciting. That absolutely right, and the same trend that we are seeing here, right? I think we'll probably talk a bit more on that later on itself. Is we definitely see the mainstream use cases coming from our background. Like we're probably not the trading guys, but we're more of the payment guys. And with the technology, like you said, coming down to 200 million nanoseconds itself, we are reaching the level that we actually need to actually roll out this at scale to retail clients that may or may not know that the underlying technology revolves stablecoin. I've been advocating this a lot, that I know because StraitsX, or our parent company FAST, has been a major payment institution across Singapore and Indonesia with large offline acquiring. We have more than 200,000 merchants itself that is accepting payment via QR code. And this group of users are probably going to be the latest part to adopt new technology and talk about stablecoin and crypto. So you kind of want to scare them to talk about the tech side, but they really just need the same or not better user experience that they need to get to, right? Which is some of the things we're probably going to touch on. But maybe then it's actually a good segue. We do a pause here that we want to go into what I think is what the users, which is the retail guys, will be looking out for today, right? They will, like we already talked about the trend, regulation, and the excitement in general of the market. Like there's going to be a lot of different stablecoin issuers out here, right? So I think then it's a good idea to actually ask you what you think about the space, that at least from StraitsX perspective, because we have been, our DNA is in payments, and we came from a regulated background from day one itself. So for us, we think that what you need to build trust and to do sustainability is transparency and regulation and clarity about the underlying assets itself. So for example, in the case of XSGD and XUSD itself, which are both MAS regulated or MAS in early compliance with the upcoming SCSI framework, you will see that there's very strict requirement about the underlying assets and what it can be done. In this case, they are all going to be tied in the Sing dollar or US dollars assets. There's high quality liquid assets of less than 12 weeks or so in terms of timeline for redemption, right? So the specification is very clear, and then it's also regular audit by regulated that will be put on us itself. And in our case, we audit that twice a month, right? One at a fixed date month and another day on a random basis to ensure that the underlying assets is always one-to-one back. So with that, we believe is a key hallmark to get the consumer to build trust, right? Because being in the space in payments and trying to deal with retails, where mom and pop, like my mom herself, the basic stuff that there's always a fear in adopting new technology, and the failure rate on that is actually must be zero. You can't have a system that collapses and it will set the industry back by many years itself to get them to adopt this. So we think that the hallmark that is actually trust and regulation for us to push out these services. But then, as you mentioned earlier on in your segue, that you think both of us agree there will be a lot of excitement, a lot of stablecoin coming out there, specifically in multiple different jurisdictions and different currency, We'd love to hear your take on how Coinbase actually, thinks about the user demands and also support and select the different stablecoin they want to work with. What is if you look into the framework that you guys think about, especially in jurisdiction that regulation might not be here, what would be the Coinbase thought on this?
Yeah, this is a really important topic, and Coinbase has always had a long-term view on compliance, on abiding with applicable laws and regulations. Sometimes there are none, then we have to fight to get clarity so that we can then comply. And then along with that, just having a very strong security posture, because there's just been too many gray actors in the crypto industry, and we believe that now sort of that gap is widening of good actors who have that long-term thinking versus that don't. So from a user perspective, right, I think on some level you could say that stablecoins are somewhat of a simple product. It's not like you're putting up like a complex DeFi app or you're kind of venturing into Web3, social, or exotic things like that. Really, the core jobs to be done of a stablecoin is stay stable and stay pegged, and be able to give the user that confidence that they can always redeem it one for one for the underlying as and when they need to. I think that is really the number one thing that stablecoins have to perform. And I think that's sort of where it ties very kind of closely into regulations, because that trust value proposition comes from having some minimum levels of transparency of what does sort of sound reserve management look like. Is it fully reserved at all times? Is it fully backed by high quality liquid collateral that can be then redeemed in size as and when is needed? Because and then do users know and are they being made aware of that, or can they go to a website and look it up at any time that they want? I think that really is the baseline for where stablecoins need to operate and exist now going forward. I think that for stablecoins that have taken that long-term view and have had time in market to demonstrate that track record, they will likely continue to accrue that user confidence and then sort of grow as a result of that. And so having some regulations that are fit for purpose for stablecoins, such as SCS and now Adidas Act in the US and others, that really helps, because I think now you can start thinking of them as equivalent digital dollars. And hopefully maybe the stablecoin lexicon will go away at some point as well, and it'll be, I think, again, like just much more mainstream. Look, these are just dollars on the internet. And so I think that is the number one thing that we hear from our users. Now, below that, there are like other preferences and certain constraints around. You want to be able to support multiple networks. Eventually, you want to be able to support all the high quality stable coins as well. There's also some more exotic stuff around like yield bearing stable coins and whatnot that we are currently monitoring, and then we I think are excited to see experiments on chain. But so far, we haven't taken any major steps towards that. We're much more focused on sound regulated stable coins with high quality collateral.
Well, actually, this is a good segue. Maybe just throwing you a new question here. I'm genuinely interested. I think there's a lot of discussion about yield-bearing stablecoin itself. My take on this itself is, from a regulation lens, it is going to be difficult for them to be able to classify that as cash or cash equivalent. They most probably will fall under a segment of some kind of security. And right. If that is the case, the adoption side of this thing will definitely be hampered. So it's like a dual-edged thing. I think consumer will definitely would love to have something that is yield-bearing. It sounds great. Yeah. But in actual fact, the implementation and the challenges on that might actually set the industry back. And my take on this is that most probably you need to separate the two cases, right? The one that is used for payments should be separated from some kind of yield assets bearing use cases. Would love to hear what you think about that.
Yeah, I think the cash equivalent framing is right. And I think it should be difficult to be termed as cash equivalent. So you should have, again, just a high bar for what qualifies for that. For what I see, the current crop of yield-bearing stable coins, it's exciting innovations, but they're more akin to tokenized money markets that are generating yield off of basis trades and other kinds of specific trading strategies underneath. And then it's a kind of clever way to sort of have it pegged close to $1, which is sort of in the in the kind of capital markets industry, it would be about like NAV and sort of where the kind of basket is trading. And you would try to kind of keep that close, and they've just sort of chosen to put that at $1 to make it just simple and accessible. So again, I think it may have its own place and purpose, But most likely, I agree. It most likely will not be termed as a cash or pro bono.
Okay, let's change gear here. I think going back to what we spend a lot of time here at StraitsX thinking about is with our recent rebrand, tagline here is stablecoin rails for real world payment, because this is where our bread and butter business for the last 8 to 7 years, right? That we are in the payment space. We help SMEs and retail asset payments as part of their day-to-day life. As I mentioned earlier on, the bar for that on the transaction level is pretty high. I always joke about the fact that the folks that have never done the acquiring business should understand that angry customers sitting in front of a store, it will be a very disturbing process, because the failure rate on just one transaction failing for a sub $5 transaction will really spoil your entire day, right? Because what happens is that there's a long queue during lunch rush hour, and one guy have his transaction stuck there. That how would the customer support be able to handle that on that fly? So that's something that actually is very close to my heart itself, and why we have been talking about these use cases where we feel the real use is actually where stablecoin in this case is really the a 10x leap improvement compared to just an incremental improvement if you're trying to solve some of these retail payment things that have been primarily solved these days with a lot of RTP payment network that has been pushed out by individual countries. What I think the killer use cases here is really in cross-border use cases, which is something that we pilot last year with Grab and Alipay, whereby the use cases here is that any Alipay Plus wallets, e-wallet players coming in from Alipay Hong Kong, Alipay China, Touch and Go in Malaysia, or KakaoPay from Korea, when the user comes with their native home e-wallet into Singapore, today they can actually scan and pay at any Grab QR code or Grab Pay merchants live, right? And to them, the user experience is seamless because it is as though they're using their home e-wallet. They will not be talking about using stablecoin, cryptocurrency. To them, this is just a scan and pay QR code, and they're using Grab. They'll be using Alipay. But at the same time, on the merchant end, this is where we really take a lot of effort to actually streamline. Is that merchants does not have to sign on a new commercial, nor do they need to be re-educated about a new payment method. To them, this is fundamentally Grab Pay, which their EDC or their terminal, which they usually have, will immediately do a real-time response when a payment comes through, right? So that is something that we have been rolling out already today, and there's a wide range of different wallet players coming in. But what we actually saw in the real benefit underlyingly is that unlike a traditional payments system that we have been used to, because we do acquiring quite a bit, is that typically all payments that we see in the past 10 years using the traditional method is a two-part flow, right? There's a communication layer where you tap your card when you want to buy a card at a Visa terminal. The EDC and the server communicated, through via TCP/IP, whatever. The machine responds then says that payments goes through, right? Which you then serve your coffee and you move on with your life. But behind the scene, the settlement is usually quite a cumbersome process that goes through multiple different banks via the SWIFT network that might take days, if not even, I heard the worst case scenario, we have seen things start for a week or so, right? Because of the need to have intra-bank settlement and also dealing with FX risk, that it's become extremely expensive. And this itself brings about two problems, right? First, liquidity issue and a cost issue itself. But fundamentally, what we have seen and why we are pushing aggressively on this solution is that stablecoin transactions is both a communication and also a settlement. Because in the case of a Grab Ali use cases, at a transaction level, every single transaction have XSGD, which is our Sing dollar stablecoin, being transmitted by Alipay directly to the Grab merchant wallet address. So the merchant, both when they receive the confirmation, actually have already received the XSGD stablecoin token, which then they will be able to use it to redeem at par, one-to-one to us, immediately at the same day or the next business day, right? So that is a fundamental game changer in the tech side that we are seeing that will help us really want to push for this kind of technology adoption itself. But with that, then that's why I say I want to change back to what, kind of a thought process that Coinbase is thinking about beside the trading side of this thing in the payment space, where you guys will think that, you will be strategically be involved, and where are the, exciting new spaces that, Coinbase would like to push into in this part of the world.
Yeah, and just to go back to what you were saying, though, one of the things that I feel like the crypto people miss is that payments is its own ecosystem, right? And it's its own sort of crazy kind of parts sort of coming together to put together what looks like a simple consumer experience, but there's so much going on under the hood. And even these considerations around adoption and getting merchants to maybe sign another agreement, when you have a few 100,000 questions, Like that itself is not feasible, right? And so you have to work with like current ecosystem players. And payments infrastructure is almost sort of a national priority at this point, right? Like if you look at UPI or SEQR here and so on. And so I think it's almost these kinds of considerations and doing like almost sort of national merchant rollouts is one of the things that like I think that crypto native folks are now learning of how intense that can be, and then how to actually integrate it into something that's already rolled out in production. So I think StraitsX is doing a really, really good, strong, playing a strong role there. So I think that's really great to see that you guys have that that out in production. Okay, so on the Coinbase side, look, I think there's going back to the trading side, right? So today, because of where like things have been, like the last kind of 8 years or so, stablecoins have been very much primarily used for trading use cases. So just as kind of collateral for doing kind of resting orders. Some of that is as an evolution with trading of before all these trading pairs used to be denominated in BTC, and then over time they switched over to some kind of USD stablecoin, and so that's where we see still like I'd say most of the kind of volume based action, because there's a lot of whale traders that then use stablecoins for collateral. But at the same time, the trend where we're seeing the fastest growth is around P2P payments using stablecoins. And I think attached to that is we're starting to see strong growth in commerce based with stablecoins as well. And I think it's partly because the adoption is growing. I think people are getting more familiar and comfortable with it. And then especially for our parts of the world, like around Southeast Asia and South Asia, it's almost sort of a necessity where the correspondent banking system is just so cumbersome, right? Like if you're doing multi-currency, multi-geo banks, it might hit like 4 or 5 different correspondent banks before it gets to its destination. And so the use case that you were describing that kind of cuts through all of that and just allows the settlement to happen alongside the messaging layer as well. So I think that's sort of where we expect most of the growth is going to come from. And so we have our own first-party products around Coinbase Commerce that does power merchants to be able to accept stablecoins and other crypto as well. But the one kind of use case that's emerging that's really kind of out in the frontier I wanted to talk about is around AI agentic payments. So this is sort of one of the really fun intersections of crypto and AI, where I think one of the world as we sort of see it going is AI agents are becoming more and more powerful. They're becoming, developing more capabilities. But for the longest time, it's mostly been around like pushing around like information. But if we actually want agents to interact and transact on our behalf, we have to provide them internet native currency units, right? Like AI agent cannot go and open a bank account or an e-wallet, but they can hold stablecoins. So that's sort of I think the key insight that we see of agentic AI commerce being powered by stablecoins. And we're starting to, we released this protocol called X402. You can check it out at x402.org. And that basically taps into the internet kind of open TCP/IP protocol that allows for payments to just hook into the current internet stack today. So that's something that we're working on and we're very kind of excited about. And there's going to be more news on that soon.
Super exciting, actually. Like before this, some folks know that I was an engineer at Amazon before I started the whole company. And then, we also see the whole entire field has changed. Used to be something that, it's done only at a big research lab for AI behind a closed door. Something that now becomes like privileged to everyone. Everyone seems, a simple developer in his backyard is able to now build solution that amaze a lot of users itself. And I think agentic payments specifically will also break a whole entire paradigm that, used to think that it's something that can be only done because it has to be done through a payment large company with API integration. But if everyone is really accepting, stablecoin as a P2P payment itself, and because of the native nature of being programmable and on-chain, I think the capability to unlock a lot of use cases there is endless. So with that, maybe we can come back and wrap things up a bit on this end, Hassan. So I think we all probably share in the excitement with the Genius Act and coming out that now is the moment, and I kind of lived through a few deja vu together with you that, we're hearing this a lot of time, right? That there's multiple different cycle and up and down in that. I think definitely now everyone is super excited. I think we have been in the space very long to actually live through multiple of this hype. Do you think this is just another hype itself, or do you think this is like a pivotal moment for what at least I think a regulated stablecoin is going to happen here? And at least on our end, we think that StraitsX is, as you mentioned, is also aligned with what Coinbase is thinking about. We're here for the long term. We want to push for real world use cases. And for that to happen, regulation is at the heart of everything we do. And then we spend a lot of our effort here building trust, because we think that, a lot of this thing, besides licensing, trust is built with time, right? And being out in the market, doing the same thing day in, day out is a good way to actually get people to understand why this kind of technology is here to stay. But, want to love to hear what you think about this. Is this a fag, or is this something that we should be thinking that it's a pivotal moment for the whole entire industry?
Yeah, not to overhype it, but I would say that, you are not bullish enough. And so I feel like this is real. This is real also because we have seen how much regulatory uncertainty has held the industry back. It forced, I think, a lot of actors to just pay legal bills and do all these kinds of weird workarounds in order to sort of get these projects off the ground, versus like focusing on like core use cases and launching things that actually solve problems. So I think that the two kind of big unlocks that have now happened are that the technology is ready. So these base level kind of infrastructures on like blockchains such as Base, providing high throughput and low cost transactions. That wasn't the case before. So if you remember with Ethereum mainnet, gas used to spike and it used to cost like $80 a transaction. That exactly. It does not happen anymore, right? Like there's also other great other L1s that are also solving the same problem. So then the technology is ready, and now finally the laws and regulations are ready as well. So we talked about the US and Singapore, but even Hong Kong has a regime, Japan has a regime, MiCA has its own sort of consideration. So there is now, broad-based support for this idea of, well-regulated stablecoins, also promoting sort of national goals as well as enabling innovation. And then I think the third stage gate that we have to get through is this concept of last mile distribution. So we have to, get all of these, scale like tech platforms with like, hundreds of millions of customers and big financial services players to also come along for the journey, because again, it's an ecosystem and, we have to all build it together. So we do think that they are starting to kind of, put their dollars where their mouth is in terms of, having very specific plans or putting something in production already. And the industry will be here, and that's what we're building for, this future where, again, it's almost that we do not have to talk about stablecoins and blockchain so much anymore. It's that we're solving real problems for real people and real merchants and businesses. And it's really upgrading the financial system, because this is not the best that we can do. The financial system would be a lot better, and we're here for that.
Yeah, I definitely echo what you think. I think maybe to recalibrate what I was talking about is that we fundamentally believe that, and as a DNA of the company, we are a payment company here, right? And I see stablecoin as a solution, right, that will help to bring us to the end, right? It's just a means to the end, right? It's actually not the end goal here. So we are seeing a lot of different use cases that are coming up today that we're excited to be enabling. And that's definitely something that my investors share sentiment of the same sort too. But maybe with that, maybe we're going to end on a more lighter note, right? I think we have talked about quite a bit of heavy topics here, from regulation, infrastructure, trust, different kind of innovation itself. With both being OG in some sense in this space for more than 6-7 years now, what is something that takes away, that makes you still laugh today? I was just sharing with you earlier on that I constantly get, tweet from the X itself, tweets that ask me questions around, when is XSGD or XUSD going to the moon? When will XUSD become 2x USD? And that really always, both bring a smile to me at the same time, thinking that, we could have done, people are excited, but at the same time, tell us that we still have a long journey here to do education here, right? Because like the topic today is the future of stable money, right? This is a stable coin. It is not supposed to 10x. It will not 10x, right? This is something that you're going to use on a daily basis. That still cracks me up. But, on your end, anything funny that you like to share, or, still to makes your day every day?
Yeah, I think if the price tag something would be horribly wrong. That then should not happen. I think that the industry is, it's a whole colorful cast of characters, and that's part of the reason why I love, working in this space is there's just always something super interesting. So we can, do our day jobs and we can, keep sort of building for this long-term vision, but it doesn't prevent from, some interesting people that are going to collide into your day. I think for me, definitely the community sort of comes up with a lot of like interesting, fun stuff. I think separate from stablecoins, at Coinbase Singapore, like we're having a moment with the Pudgy Singapore community, and so we posted up our ST60 quiz that's sort of themed around like the Merlion Pudgy, and so it's getting a lot of traction, a lot of like funny comments and on X. So. You can go check that out, but definitely brings a smile to me every time I look at it.
Yeah, 100%. I think there's something about this space and ecosystem because of the openness and the transparency that it brings about a lot of different creativity that we don't see in the more boring side of things that we do on a regulation side, right? Because a simple developer can take this thing and fork it and do whatever they want and without having to ask for permission. I think that unlocks so much things that keeps the space really exciting, and at the same time, keep us more motivated to actually go back down to building. Maybe Hassan, from a point of view of the users that might be new to Coinbase, maybe you want to ask them how they can actually get access to Coinbase app or actually use our services.
Yeah, we're fully licensed in Singapore, so you can find us on Coinbase.com or download our apps on the App Store or Play Store, and then you can follow us on X on @CoinbaseSG, and I'm also fairly terminally online at Hassan_NY. So I hope to see you there.
So with that, thank you, Hassan Ahmed, the Singapore Country Director for Coinbase, and my good friend here, for coming here to join the show. Thank you, everyone, for your time.